Wall Street remained short for the New Year's Day holiday, but futures trade slightly higher, indicating a positive start to the new year after a stellar 2024. Asian markets trade mixed as China's manufacturing growth misses expectations. The GIFT Nifty is suggesting a lower start for the Indian markets. Crude prices tick higher, taking Brent crude to about $74 a barrel. Gold edges higher after posting its best year since 2010, rising 26% in 2024. Tata Motors December sales meet estimates even as commercial vehicles segment comes under pressure. The company, however, expects CV sales to pick up in the fourth quarter. Hello, good morning. You've tuned into Power Breakfast on CNBC TV18 and I'm Vinny Motiwala. Yes, yesterday was New Year's. We had seen that the US markets were shut. Today, in the Asian markets, we have Japan that is shut for trade, as well as we have the New Zealand market that is also shut for trade. But let's start the show by talking about what the other Asian markets are doing this morning in trade. Let's talk about the Hang Seng as well as the Taiwan index, where they are headed in trade, because we've seen a bit of a muted start that has come in here because China's data has come in as well. So keep an eye out on that one. Hang Seng down 0.5% in trade. I beg your pardon. Taiwan index is down 0.5%. Hang Seng is down almost 1.5% in trade. ASX 200, that's the one which is trading with some bit of a positive bias this morning, but a bit of a muted and a mixed morning coming in for the Asian markets. As of now, the Nifty implied open is indicating a bit of a muted start for the Indian markets. Nifty implied open down almost 50 points. Yesterday, we had seen the Indian markets see a bit of a recovery and a run-up coming in. Around 23,700 levels is what they closed at, 23,700. About that mark. So keep an eye out on the Indian markets where they are headed as of today. Implied open indicating a bit of a muted start today. But on that note, let's move on and talk about the global market action that we saw overnight in terms of cues, how this is going to be impacting. The research team is joining in with us to tell us what these cues are indicating for our Indian markets this morning. And we do have Vivek joining in with us, as well as Hormaz, who's there as well. Good morning, guys. Thank you so much for joining in with us this morning. And Vivek, let me start up with you. Asian markets have opened up a bit mixed. Cues in terms of Wall Street indicating muted is for, as of now, the futures. What is the Indian market looking like?
Well, good morning, Vinny. Like you mentioned, what's actually happened is that Indian markets were amongst the few markets that were actually open on Jan 1st. So overnight cues, not too much to read out, given the fact that you had most of the markets that were closed. Also, when you're talking about Asian markets today, like you indicated, quite a negative opening as far as most of the Asian markets are concerned. So some muted handover or maybe soft start is what the GIFT Nifty is indicated. But yesterday was a good day as far as the Indian markets are concerned. We started off calendar year 2025 on a very strong note. All of the indices ended quite higher and quite strong. Nifty ended about the 23,750 level. The mid-cap index as well as small-cap index too did quite well in the session, especially intraday sharp recovery coming in. What aided the gains as far as the Nifty was concerned? Well, it was the large caps, especially the auto packs. So names like Maruti as well as M&M on the back of strong or better than anticipated auto sales monthly data, something that did quite well. HDFC Bank too joined the party yesterday as far as the bulls were concerned. Now, when you're talking of some of the stocks that did quite weak, Bajaj Auto and Escorts, they were the ones that missed expectations, so they actually saw quite a bit of a sell-off. But SJVN was one stock on the back of multiple MOUs that the company signed in the state of Gujarat. That particular stock ended higher by almost 6%. What is it that we'll be watching out for? Like we indicated, gap down start, auto sales, more reactions coming in. Quarterly updates have also started coming in, given the fact that Q3 has now officially ended. So some, expect some reactions. Number one, to Coal India, names like NMDC and also Catholic Syrian Bank. All of these will react to the quarterly updates that the companies have given.
Absolutely, Vivek. Thank you so much for that. And carrying it forward with some of the other stock that you should be keeping on your radar this morning. RailTel, they've received an order of 78.4 crores from Bharat Coking Coal. Keep an eye on that one. Q3 updates, Tata Motors, muted update coming in over here, what you're looking at it. Total sales is up by 1% for the month of December versus estimates it's higher by 3%. But the outlook that the company has given is quite positive. So keep an eye out on that because commercial vehicle sales were down just a percent. Passenger vehicles saw an uptick of almost 1% in sales, while domestic sales were up by 1%, so muted from Tata Motors. South Indian Bank Q3 FY25 update, gross advances are up by 12%, while deposits saw 6.3% uptick, so keeping an eye on South Indian Bank. NMDC production data that has come in also, what we're seeing coming in this time. Now, in terms of NMDC's production data, we are seeing for the month of December, it's 4.7 million tons, I beg your pardon, versus last year was 4.48 tons. So last year versus this year, largely muted in terms of production data that we're seeing coming in. Sales also largely muted for April to December this time around. It's at 3.8. So keep an 31.8. So keep an eye on that. CSB Bank, that's also in focus on the back of its Q3 updates. We're seeing gross advances that have seen coming in with an uptick this time around of 24,572 crores. Total deposits at 33,406 crores. So keep an eye out on CSB Bank. Seems like a decent update that is coming in terms of the growth that we're seeing for the advances as well as the deposits. Other than that, a lot of other stocks are going to be in focus. But what is the FNOQ looking like this morning? We have Hormaz joining with us for that. Good morning, Hormaz.
Good morning, Vinny, and we are back. This is a positive start to the year. At least that's what the screen shows for the Nifty. We started off the year on a positive note, 100-point gain for the index. We recovered from the lows of the day, but the actual test will begin even today because it is the weekly expiry for the Nifty, and starting next week when participation returns to full force, because now we are back at that congestion zone for the Nifty between 23,800 to 24,000. The positive, though, was on the Nifty Bank because yet again taking support at the 200-day moving average of 5,500, recovering 600 points from the lows of the day, and more importantly closing above the mark of 51,000. That was the positive for the Nifty Bank as well. The broader markets were fairly okay yesterday. There was plenty of stock specific action. But for now, the GIFT Nifty is indicating a slightly subdued start for our own markets, and of course there will be this weekly options expiry volatility also that will be at play in today's trading session. The FIIs continue to remain net sellers in the cash market, close to around 1,800 crores. They were net sellers in the index futures as well. They've added close to 14,000 short contracts in yesterday's session and only about close to 1,800 long contracts. Now for the exposure, the FI exposure is now down to 13.5% when it comes to the long-short ratio. There's 13.5% for the FIIs. The clients too added around 2.6 lakh contracts in yesterday's trading session. Now for the options bid, though, the 23,900 call has seen some bit of shedding in open interest, and also there was some addition seen in the 24,100 call option. We will keep an eye out if we get to that 24,000 zone. Will that have enough legs to sustain? Now on the put side, though, there was addition seen at 23,700, so it remains to be seen. We closed above 23,700 yesterday, so whether that acts as some sort of support in today's trading session as well. The immediate support further down comes at 23,600, and of course on the upside 23,850. That remains the first barrier for the index to cross before it goes up to 24,000. Among the stocks, the first stock to enter the FNO ban this series is Manappuram Finance, so keep an eye out on that stock as well for today's session.
Okay, thank you so much for that, Hormaz. But let's move on, and as we enter the new year, we get in touch, and we got in touch with Sameer Arora of Helios Capital on the likely triggers for the Indian markets going into 2025. He also spoke on other sectors which he is bullish on in this new year. Listen in to what he had to say.
You take it from different pockets. You buy some stocks because they are growing well, but they have also performing well in the market, and some which are doing well but are cheap or value. And it is that combo of buying some financials and some of these high growth stocks that you're talking about, these food delivery or otherwise, or whatever be the new growth. Also, if you look at the FIIs, it looks as if FIIs are selling, but they are effectively selling their current holdings and buying into IPOs and QIPs, which means they are also, in some sense, changing their portfolio from some of the older names that they may be having in consumer and auto and others, and buying into these new IPOs, which are, at least many of them or some of them, are offering high growth. So there is no point in ever talking about absolutely one or the other. Of course, you can have groups of sectors doing well and expectations of groups of sectors doing badly, but there is no overdoing anyone, I would say, because you really never know what fancy the market takes.
No, I agree, but you're a veteran of how many cycles in the market, probably 30 years. So
Right.
At this juncture, bhagta hua घोड़े के पीछे ही भागो, EMS, e-commerce types, mid caps, या put a larger share in the one that did not perform, HDFC Bank. I mean, you can't complain about the quality of some of these stocks, but not their best year.
So that's why we have I think a good description of these. One, which is what we call high confidence in reasonable return, which is these HDFC Bank or ICICI Bank or these big IT companies. You're not expecting to make 20-25% return, but you hope to make in high double digits, maybe 15, 17, 14, depending on the market. And you have more money than otherwise. And then you have these smaller, newer, faster growing where you keep a limit on each stock and you diversify across the different themes and have maybe, in our case, maybe around 15, 18%, but that also in 5, 6 stocks. And it is that combo which lets us sleep every day without overly worrying. If you say you have to make only one investment and that one investment is the marginal new investment, then also there's an easy answer. It depends on what you don't have.
You're saying only 15 to 18% of your portfolio would be in some of these smaller, faster growing companies, while 85 to 90% or whatever, 80, 90% would be in these, large cap HDFC type bank. Okay.
No, the larger, well-known, these compounder names that were given, which spoiled their compounding immediately when that name was given, those are 50, 60%. These 18, 20% are these super high growth guys, which are these, 25, 30% and growing also, but making losses, maybe all these Paytm, Swiggy, Zomato types. And you still have a third group. No, these are the groups where you are discovering new companies and they might be a little valued a little cheaply, or their growth is a little high, but you're not expecting them to make 25 and 30% for 4 or 5 years. This could be indigene types or these smaller hotels or something, which are not also super well known, not super well ready in terms of quality and history, but they are promising. And we are trying to discover some of them. So there are sort of
Do you want to tell us some of these stocks that you're discovering?
No, we
like
don't
Indigene is one.
tell you anymore, because now we are also separately in the mutual fund business. So you can see 100% of the portfolio every year, including the changes that the Indian guys make. And broadly, although I manage an offshore fund, because the research is common, many of these names will be there. But so you can see all of them yourself. There's nothing for me to highlight here separately.
So Samir, you spoke about that, how FIIs may not be putting money in the secondary market, but they are in the Indian equity market by participating in IPOs, QIPs, etc., in the other forms of fundraise that is taking place. Is there any more nuance to this? Is there a preference that FIIs are gravitating towards? Have you done any analysis on this?
No, so my big, I don't do all this analysis. I just interpret other people's analysis. But big picture, out of the 20 odd years, if you see all this data, there are only 4 actual calendar years in which the FIs have been negative. Okay. Now this year you can say they are sort of break even on an aggregate basis. Adding both primary and secondary. But you can draw this conclusion that the stocks and the sectors that they are liking now in terms of is basically what I was saying, that diversify a little bit away from the old sectors to a little bit to the new sectors. So that is one big picture. But second is not to think in absolute that the FIIs are writing off India and selling India, because as you can see in the percentage years, you can see it in the years in which their flows are negative, that you can attribute it to something specific. In 22, the interest rates hiked from whatever 0.5 to 5%, and there was a war. In 18, we had this crisis. In 13, it was that, then before Raghuram Rajan came, whatever, the currency fell 28% or whatever, 19%, and the market fell 28%. And then one was 2008. So to take those 4 years and say, oh, FIIs, will they buy or not buy? Mostly you have to assume they will buy, mostly.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. Up next, US President-elect Donald Trump sides with Elon Musk on H-1B visa row and says, and I quote, "We need smart people in the country." More on the story after the break. Welcome back to Power Breakfast on CNBC TV18. And the US President-elect Donald Trump has reaffirmed his support to the H-1B1 visa. Now, when he was asked why he changed his mind, this is what he had to say. Listen in.
I didn't change my mind. I've always felt we have to have the most competent people in our country. We need competent people. We need smart people coming into our country. And we need a lot of people coming in. We're going to have jobs like we've never had before.
Okay, on that note, it's time to get you what's happening in the world of commodities. This morning, we have Manisha Gupta joining in with us to tell us the same. Manisha, good morning. What are we watching out for? Crude, gold, what is looking nice?
Oh, well, Vinny, you know, the good thing is that most of the markets, international markets, that is back to work today, and you're looking at volumes and you're looking at meaningful movement in many of these commodity prices. I'll start with crude oil, where we've seen nearly a percentage point of a gain overnight market. Remember, crude prices did close 2024 in the negative and a second yearly decline as well. But 2025 has started on a positive note, and this is on the back of decline in U.S. crude inventories. A third weekly draw is what the markets are looking at. Second, there was a World Bank report which has put out an improved forecast for China's economic growth in 2024 and for 2025 as well. China is also pledging a special treasury bonds worth 3 trillion yuan in this year. That has been supportive as well. And then EIA also put a demand growth forecast for 2024 and 25 as well. So we are starting this year on some positive background, and that has been supportive. And it's been a good gain overnight as the markets open for precious metals as well. Remember, for gold and silver, 2024 was a strong year. We've seen 24 to 28% of gains coming for both of these commodities. And even as the markets await cues from U.S. interest rate outlook, Trump tariff policies, we have seen 0.5% of gain for gold and 1.5% of jump for silver as most market participants start coming back into the market. So a strong beginning, I would say, for many of these commodities.
Okay, Manisha, thank you so much for that update this morning. But on that note, we're going to slip into a very short break. Up next, we'll get you updates on an attack that took place in New Orleans during the New Year celebration. Welcome back to Power Breakfast on CNBC TV18. Now let's move on. The government has actually introduced some significant changes to income tax regime back in the 2024 budget. So what do the taxpayers need to keep in mind while filing their income tax return later this year? Shivani Bazaz is joining in with us to give us the list that we should be keeping an eye out on.
Well, absolutely. The tax season has begun and there are some key changes that tax filers should keep in mind for 2025. Let's break them down. First, the new income tax slabs under the revised new tax regime. The basic exemption limit has been raised from 2.5 lakh rupees to 3 lakh rupees now. This means income up to 3 lakh rupees is now tax-free. Tax rates have also been restructured. 3 to 7 lakh rupees is taxed at 5%, 7 to 10 lakh is taxed at 10%, 10 to 12 at 15%, 12 to 15 at 20%, and over 15 lakh rupees annually remains in the 30% bracket. These changes aim to provide relief for the lower and middle income groups. Next, significant update for capital gain taxes. Short-term capital gains on equities are now taxed at 20% up from the earlier 15%. Long-term capital gains have a flat tax rate of 12.5% compared to like the equities used to be taxed at 10% earlier, but the exemption limit has now increased from 1 lakh rupees to 1.25 lakh rupees annually. Plus, the holding period for long-term classification has also been simplified, 12 months for listed securities like equities and 24 months for other assets. For those contributing to the National Pension System, the NPS, there's good news. The deduction limit for employer contribution has increased from 10% to 14% of the basic salary, helping you save more for retirement. Salaried employees can also now claim TDS and TCS credits for taxes deducted or collected at source on other incomes and expenses. This ensures more accurate deductions on salaried income. And finally, for luxury shoppers, a higher TCS rate applies to purchases over 10 lakh rupees, making high-end items more expensive. These changes could impact how you file your returns, so make sure that you plan accordingly and stay informed this tax season. Back to you.
Thank you so much for that. But let's move on and talk about the aviation space. Now, as the fog season approaches, the Aviation Ministry has implemented several crucial measures to ensure smooth operations and safety during low visibility conditions. Madhya is joining in with us to tell us about that. Madhya.
Well, airlines are instructed to proactively communicate with passengers about potential delays or cancellations. So you may now hear captains making announcements in the flight on the reason for delays. And airlines have been reminded they cannot keep passengers on board a delayed aircraft for over 90 minutes and cancel the flight if delays exceed 3 hours. Furthermore, airlines have been told to sensitize their operations control centers to enhance real-time coordination with key stakeholders. Key steps are also being taken to ensure safe operations. The IMD and AAI, which is Airport Authority of India, are working on implementing advanced weather observation systems at major airports, including the Delhi airport. Now, airlines are ensuring that Cat 2 and Cat 3 compliant crews and aircraft are ready for low visibility conditions. Delhi Airport has activated Cat 3 ILS, which is the landing system on 3 runways. It has installed LED screens for real-time visibility updates and increased the number of follow-me vehicles to guide pilots safely on the apron area. Now, additionally, airlines have said they will ensure that there is full staffing at check-in counters during the peak hours to minimize passenger inconvenience. So that's the preparedness done as we approach the dense, foggy season.
Thanks for that, Madhya. But some grim news coming in from the United States at the start of the new year. An Army veteran in New Orleans, Louisiana, opened fire in the French Quarter of the city after ramming his pickup truck into people ringing in the new year. Now, according to the local police, 15 people died in the attack while over 30 sustained injuries. The incident is being probed as a terrorist incident, and initial investigations have indicated links with Islamic State. Officials also believe that the attacker did not act alone. US President Joe Biden condemned the attack and expressed his condolences to those who lost their loved ones in the attack. Okay, on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.